we do is that we don't sit around and buy and hold trades. We don't sit around with these buy and hold situations that can wipe out a year's worth of gains in a few days when you get a sell-off in a marketplace. And then you're always left with that challenge. Do I hedge it? Do I not hedge it? Well, this isn't about that. This is about in and out trading. It's pension available. You can trade these types of stocks for a pension, so long as you go for the long ones. I mean, sometimes you get some short sell opportunities as well. And but the idea is, of course, that you're not exposing yourself to big market swings. You're not exposing yourself to these types of setups. You're not exposing yourself to the individual gyrations of the market. You're pretty much sitting in cash for 99.99%, 99% of the market exposure. So you're not exposed to the market. If you want to be exposed to the market, you can still buy some divvy shares during that period. So if you want to buy some divvy stocks, divvy stocks as a rule are very good performers, especially when the market goes negative, and you can pick up some dividends along the way. But obviously, if you want to just sit in cash, my approach to stock trading is I don't want to sit on a buy and hold stock. I think it's just a terrible proposition, to be honest. So I'd rather get in, make my money, get out, get it back in cash, and wait for the next real money opportunity to set up. And that happens round every earnings report period. And I can make more money during that earnings report. And then for the next quarter, I can do some bonds, I can do some equities, some dividend equities, and I can look for stocks that have good dividends forecasted during the next quiet period, make some money out of the dividends, back into a cash again for the earnings period, so that I can jump on an earnings report if I have an opportunity to do so. So that's the way I approach my pension fund trading. And, and it's the way I would approach my normal stock trading. If I had a stock fund, that's how I would trade the stock funds. I would trade for income most of the year, and then I would trade for explosives during earnings season. I would go back into cash for earnings season, trade for those explosive moves, try and really kick off the account with some big winners, and then, if we get the big splash, then we can move it forward. So we'll talk about it later on this afternoon.